Hi everyone, Tara Warren. Thank you for stopping on my channel. Today we're going to be talking about DSCR loans, or debt service coverage ratio loans. So before I get into the nitty gritty, if you could give me a like or subscribe, I would really appreciate it. I hope to see you on my channel in the future, and we'll definitely plan on adding more info and more videos throughout the year. So what is a DSCR loan? It stands for debt service coverage ratio. I don't know why we have to make it sound so complicated, but the simple explanation is instead of using your personal income to qualify for this loan, we're going to use the income from the income generating property as the qualifying income for this loan. Where the coverage ratio portion comes in is where we want to see that monthly income generated from the property is going to cover the monthly payment. So if the payment is $3,000, we want to see that that property is going to be making at least $3,000 or more in order to qualify for this loan and for that particular property. So it's kind of nice if one property doesn't work out because it doesn't generate enough income. It doesn't mean you can't buy a property at all. It just means you need to buy a different one. So the cool thing is these are for your investment properties and your income generating properties only. This is a great way to get into the game of investing when you say you can't qualify traditionally for an investment property or your income doesn't cover two payments. These loans were really created when the whole Airbnb world blew up. There was a gap in the mortgage space that didn't cover or allow for short-term rental income to be used as qualifying income for the property. But we know those properties can and do make a ton of money. So this product was really invented to fill that gap and allow people to buy those properties that were making a ton of money on as a short-term rental. So you can use this loan for short-term or long-term rentals. It is available for both. It doesn't have to just be short-term rental. But they're actually very simple. So we're going to look at your credit score, but we are excluding any of your personal income. Your personal liabilities are not part of the equation. It's, do you have a good credit, good payment history, and do you have enough for the down payment? And then does the property cover its own expenses? Those are really kind of the three basics of qualifying for this loan. So like I said, if one property doesn't work, doesn't mean you can't buy anything. You just have to find a property that generates a little bit more income. So these are really cool. They're a great loan if you want to get into the investing game. Most lenders will require that you do own your primary residence or have at least owned a property in the past. There are some limitations if you are a first-time investor, so definitely reach out if you're a first-time investor. But if you own multiple properties, this is a great product for you because we aren't looking at your tax returns, what other properties you own. It's all simply based on this one individual property. You can close the loan in the business name, which is cool. There are some benefits to being able to handle that whole transaction, start to finish, in the name of your business rather than your personal name, and transferring that over to your business later. And they aren't going to look at how many other properties you own or any of those kind of things. So the cons of this loan are the rates can be a little higher. However, if you have good credit and you're putting 20 or 25% down, you can get a really competitive rate on these. And like I said, they're actually really a pretty simple loan. So if you're interested in these kind of loans or want to talk about getting into the investment property game, reach out. I would love to connect with you and talk more about your situation.